Well, with inflationary pressures growing and government tax cuts and rebates coming in on the 1st of July, the RBA's job isn't getting any easier, according to my next guest. So what implications do those uncertainties have on the housing market? To get us across the latest trends in housing, Anthony Landahl from Equilibria Finance, joins me now. Anthony, thank you so much for joining us. I mean, just guessing what the RBA is going to do next. They're meeting in June, particularly when you're starting to see some cuts now from the G7.
Yeah, g'day, Juliet. Nice to be here. That's some interesting comments. Obviously, we've seen the Canadian board cut rates, but we've got to bear in mind they're now meeting their inflationary targets and their cash rate has been quite a bit higher than ours in Australia. So we're still well above those inflationary targets. We've had recent, we had the release this week of the wage rises, 3.75%. We've also obviously got the tax cuts coming in on 1 July, as well as some of the rebate budget. So yeah, the RBA job's not getting any easier, and we're seeing some interesting trends come through in the housing market. We've just got the recent data suggesting the market's risen again for the 16th consecutive month. The main drivers of that are Perth. They've grown another 2% a month. Adelaide's at about 1.8%. Brisbane's at 1.4%. In fact, Brisbane has now superseded Melbourne and Canberra as the second most expensive capital city to live in, behind Sydney. So some really strong growth numbers are still coming out of some of these capital cities. Sydney's still growing. It's now grown 14.1% since their trough. So interesting times ahead. There's a lot of uncertainty, and we are starting to see some trends around affordability, around investor behaviour and first home buyers as well.
Yeah, I wanted to ask you about that because I actually had dinner with a friend who's lost her job and needs to refinance and or sell. So it's happening, you know, across the board in terms of these high interest rates starting to bite. It was interesting what you mentioned about Brisbane. We saw that CoreLogic data, but what are you seeing in terms of the investor trends from high interest rates?
Yeah, where investors really came off the market through the pandemic, which is obviously a little while ago now, but we had a period of increasing rates, which created a lot of uncertainty for investments around cash flow, around the cost to hold a property and the cost to fund a property. But we're seeing investors come back into the market now. There's been about a 20% lift in credit flows with investors, but we're seeing a different type of investor come into the market. We're actually seeing a lot of first home buyers now coming into the market as an investor, looking at rent vesting, and they're buying in areas that may not be traditional investment hotspots, if you like. And investors generally looking at where are you getting that long-term capital growth, and investors generally looking at what's the cost from a cash flow perspective to hold the property. But about 46% of investors at the moment, which is an incredibly high number, are actually first-time buyers who are starting to look in different areas. They might be looking in areas that they might look at living in down the track once their family's grown up, or once they are looking at a different area to live in. But in the short term, they want to rent in the area they want to live and then buy a property in another area that they can afford to get into the market with an eye on where they might live down the track. So 46% or so of investors right now are first-time buyers, which is well above historic averages. And a lot of that is driven by affordability, and a lot of that is driven by people having to look into other areas to get into the market and in other ways.
Sound like you're describing me, Anthony. And speaking of, as somebody who's renting and has to move, what's the rental market like? What am I facing?
Rental market's not easy. I mean, supply, whether you're renting or buying, is still the biggest constraint. We've started to see a little bit of an easing up in terms of some of that some of that supply constraint in the rental market, but fundamentally, we've still got vacancy rates in and around 1%, and in fact under 1% in some areas. So that's a very, very tight rental market, and there's nothing on the horizon showing that's suddenly going to ease up in terms of supply. The government talked about 1.2 million homes over 5 years. There's some supply initiatives in the recent budget, but we're well and truly behind anything like those sort of numbers. The credit flows and construction approvals are below 5-year trends for both houses and units. So it's a really challenging environment for renting. or for purchasing. And the big driver is those supply constraints. We've got record migration numbers, and we just haven't got enough houses. And there's going to be more short-term pain, I think, for renters and home buyers around supply, and that supply's driven up rentals, and it's also keeping the as I indicated before, we've had 16 months of consecutive growth. It's creating concentration competition around properties available to purchase.